Trading strategy on hanging man candlestick pattern. Welcome traders. In today's session, we will explore one of the most reliable bearish reversal candlestick patterns, the hanging man. We'll look at how it forms, what market psychology it represents, and how to confirm its signals using relative strength index, stochastic, and volume analysis. What is a hanging man? The hanging man is a single candlestick pattern with a very specific structure. A small real body near the top of the trading range. A long lower shadow, at least twice the size of the body. Little or no upper shadow. It looks like a man hanging upside down. The body is the head and the long shadow represents the dangling legs. Even though it looks similar to a hammer, the key difference is location. At the top of an uptrend hanging man, bearish. At the bottom of a downtrend hammer, bullish. So the same candle can give opposite signals depending on where it appears in the trend. Psychology behind the pattern. After a strong upward trend, everyone is bullish. The price opens high but then falls sharply during the session, meaning sellers entered aggressively. Later, the bulls try to recover the price, pushing it back up. But the long lower shadow tells us the truth. Sellers already exposed weakness in the uptrend. Once traders see a lower open or a bearish candle the next day, panic kicks in. Oh no, sellers are coming in. It's time to get up. And this emotional shift turns into a reversal. Criteria for a valid hanging man. To identify a correct hanging man pattern, look for lower shadow at least 2 times the body. Real body near the top of the trading range. No upper shadow or only a very small one. The next day must confirm a bearish candle or a gap down. Without confirmation, the pattern is not reliable. Signal enhancements. The hanging man becomes more powerful when the lower shadow is very long. There is a gap up on the signal day. Volume is high, indicating institutional selling. It forms at a major resistance or a key moving average. These additional details increase reversal probability. Trading with relative strength index, RSI, stochastic and volume. Beyond candlestick shape, confirm using relative strength index. Should be in overbought zone above 70. Stochastic. Also, negative crossover NCO in overbought condition. %K crossing below %D is equal to early sell trigger. Volume. Large volume or more than average volume validates that selling pressure is real and strong. When these 3 tools align with a hanging man, the reversal signal becomes extremely high probability. Why it works? A hanging man in an overbought market signals exhaustion. Nervous bulls start exiting their trades. And when price gaps down the next day, the message becomes loud and clear. The trend is turning bearish. Dragonfly doji is also considered as hanging man. The strongest version of this signal is the dragonfly doji. Open and close near the high of the session. Extremely long lower shadow. If the next candle opens lower, it is one of the most powerful bearish warnings in candlestick analysis. One candle, the hanging man, can reveal a crucial shift in market psychology. Confirmation is essential to avoid false signals. Combining RSI, stochastic, and volume dramatically increases accuracy. This pattern has been trusted for centuries, proving its value as a major market warning signal. A trading setup study, Hanging Man Reversal Strategy, Daily Chart. The hanging man appears after a clear uptrend, signaling potential weakness in daily time frame. RSI is above 70 and turning down. Stochastic is in the overbought zone and crossing downward and formed negative crossover. The hanging man has formed with large volume than previous candles, showing active participation. After wait for the next candle to close below the hanging man's low. The entry short when price breaks below the hanging man's low intraday with volume confirmation. Place stop loss, SL, just above the hanging man's high. This protects against false breakdowns. Profit taking target 1, the risk and reward ratio is equal to 1:3. Next profit taking target 2, the risk and reward ratio is equal to 1:6. Position size, risk is equal to 1% of trading capital. Avoid taking hanging man trades in sideways or choppy markets. Stronger signal when the hanging man forms at resistance or Fibonacci retracement, 61.8% of a prior fall. Combined with 5 EMA and 13 EMA crossover for momentum confirmation, if 5 EMA crosses below 13 EMA after hanging man, a powerful signal. If you gained value from this video, make sure to like, share, and subscribe for more professional candlestick and indicator-based trading lessons. Comment below which candlestick pattern you want us to cover next. Thank you for watching. Trade smart and manage your risk.